1.23, surpassing the old high set way back on August 31st of 1993. The closing tick rather bullish, plus 457. Standard & Poor's 500 up 4.11, over a 7.25 point advance in the S&P 100. Mid-cap 400 down about a quarter of a point, and the CRB Bridge Futures Price Index up just over a point and a half after losing 2.5 points yesterday. The New York Stock Exchange Composite up 2 1/3. The value line up 0.39. The Russell 2000 small cap fell 0.65, but the Wilshire 5000 edged up about 28 1/3 points. The bond market had a quiet morning in the absence of any major reports on the economy, but prices picked up in early afternoon on flight to quality buying, prompted by those reports that Japan's troubled Yamaichi Securities Corporation may be forced to shut down and declare bankruptcy. The rally also triggered some short covering, which helped tax-free and corporate issues close with 1/8 point gains on the average, while treasuries ended moderately higher across the board, the 5-year notes gaining 5/32, the 10-year notes up 9/32, and the bellwether 30-year bond up 12/32, bringing the yield all the way down to 6.03%. The Lehman Brothers Long Treasury Bond Index was up 1.89. I'll be back shortly to show you where the action was on Wall Street today. Jeff?
Well, as you heard, bond prices were up and yields down again today, and that has investors wondering how low can they go. Scott Gervey reports.
How long can this bond rally continue? Bond traders are wondering as the yield on the 30-year Treasury gets closer and closer to 6%. From its peak back in March, just over the 7% mark, the yield has been headed down with few interruptions. Bond experts point to the extraordinarily low inflation rates, which have kept Fed policy on hold, and to turmoil in overseas markets, with problems spreading from country to country, prompting a flight to quality for many investors.
In late October, we had problems in Hong Kong, Singapore, Malaysian markets. And then in November, it washed over, where it had a major impact on South Korea and Japan. Throughout this period, we have seen a heightened preference for quality, safety, and liquidity, and that has driven intermediate and long-term Treasury yields down to nearly 2-year lows.
In fact, some market watchers see a risk to American bonds as that overseas turmoil calms down, focusing attention again on the domestic economy. Inflation still does not seem to be a problem, and the continued decline in the federal deficit should reduce the number of Treasury securities on the market. But the Japanese bank crisis remains a wild card. Rumors have flooded the Treasury futures pits, saying that the Japanese government may use public funds to bail out troubled Japanese banks. A large amount of those funds are now invested in U.S. securities. Their sale would reduce prices and drive up yields.
I'm just not so sure that this is going to be a meaningful factor for the bond market and for interest rates going forward. It's something we have to watch, but I think in the end, it's one of those things that people have been worrying about for the last 2 or 3 years. It hasn't happened yet, and frankly, I don't think it's going to happen.
Most Fed watchers believe the central bank will leave interest rates alone when it meets next month, and some are now even predicting that the Fed will be on hold through all of 1998. Scott Gervey, Nightly Business Report, New York.
The Food and Drug Administration has been given wider authority tonight to speed new drugs to the marketplace. President Clinton signed the FDA Modernization Act of 1997 today. It lets outsiders review medical devices to reduce backlogs in the approval process. It also has incentives for pharmaceutical companies to develop drugs for children and allows faster patient access to experimental therapies.
Anybody who's ever had a family in this situation knows what an important part of the legislation this is. We know that for many patients, experimental treatments represent their best, perhaps their only chance for recovery.
But not everyone is happy with the bill. Some consumer advocate groups say it will hamper the FDA's ability to protect consumers.
Still ahead on Nightly Business Report, an unexpected dividend of consolidation in the banking industry. This bank has just one branch, but small as it is, it fills a very big void.
Big week on the upside, especially for the Dow Industrial Average, which was up 308.5 points overall, thanks partly to today's 54.5 point gain. And the advanced decline ratio today about 15 to 12 positive, 171 new yearly highs, only 35 new lows. Compact Computer topped the active list on 12.6 million shares, down 2 13/16 today. AT&T hit another record high, up 1 1/8. General Electric up 13/16, only 2 points from a record high. Micron Technology edged up 3/16. Unisys an 8-point gainer, 5th in volume. Eli Lilly edged up 1/8. Of course, yesterday an FDA panel recommended early approval of the company's Evista osteoporosis product. Telebrazil was up 3 points. The Bovespa index gained 2.5% today. Merck up 2 points, maybe on that FDA news. IBM edged up 13/16. The company's chairman, Lou Gerstner, has agreed to stay on with Big Blue for 5 more years. He'll get a 2 million share option, or an option on 2 million more shares. Let's put it that way. Coca-Cola did well, up 1/4. Delta Air up 3 3/16, helping that Dow Transport Index rise 13.25 points. Delta was the best gainer in the transport index. Disney hitting a record high, up 3 13/16. Earlier in the week, as you recall, Disney reported record earnings. Exxon up 1 5/16. Oil prices, the December contract in New York, up $17 a barrel, 17 cents a barrel. Let's make it. Kimberly-Clark up 1 7/8. After the market closed, Kimberly announced a major restructuring. It will close 18 manufacturing facilities. It'll cut 5,000 jobs. That's 7% of its workforce. Nabisco Holdings up 3 7/8. Now, the company's chairman and CEO, John Greenis, is going to retire for unspecified health reasons, although nothing life-threatening. Goldman Sachs added the stock to its recommended list today, incidentally. Rouse Company up 2 7/8. The company's board of directors has approved a move to qualify the company as a real estate investment trust for the tax year starting January 1st, 1998. Rayovac Corporation, the 3rd largest U.S. battery manufacturer, charged up 2.5 points today. A 6.7 million share initial public offering priced at 14, opened at 16 3/8. The high of the day, 17, closed near the high. Affiliated Managers up 3 full points. This company is an asset management company with $40 billion under management. It's a new issue. 7.5 million shares offered at $23.50, opened at 25 3/4. High of the day, 26 15/16. Hambrecht & Quist up another 4 7/16 after jumping well over 5 points yesterday on takeover speculation. Today, the company told the New York Exchange and everybody else that its policy is not to comment on a stock activity. AMB Property Corporation, a 2-point gainer. It's a real estate investment trust, operates industrial properties and shopping centers. It's a new issue today. 14 million shares at 21, opened at that price, the high 23.5. Atchison Casting down 3 7/8. The symbol is FDY for Foundry. The company sees second quarter earnings hurt by about 15 cents a share due to a sales decline at its prime cast unit. And Norrell Corporation down 3 3/4. It'll take an $18 million fourth quarter charge related to the termination of 2 of its businesses. NASDAQ trading a loss of 5.81 in the index today, but for the week that index rose 37.24 points, or 2.3%. Volume down a bit from yesterday at 679.1 million shares, 19 stocks higher for every 22 lower. Applied Materials down 1 1/4, topped the active list. Yesterday, fourth quarter earnings were a cent better than expectations, 47 cents. Microsoft gained a point. Intel was down 5/8. Dell Computer, whose third quarter earnings are due out on Monday, down 2 5/16. The street's looking for about $65 cents a share. Cisco System off 3/8. 3Com moved up 5/8. WorldCom down a 16th. Sun Microsystem down 1 5/16. KLA 10 Core down 2 13/16. The Adams Harkness brokerage downgraded it, and Costco companies are up 2 1/16. Real Networks, this is a software company, went public today. 3 million shares offered at $12.50, opened at 19 3/8, and that was the high of the day, and then it backed down a little bit. BDM International up 7 full points. Company's agreed to be acquired by TRW for $29.50 a share. And Neoprobe down 3 13/16. Company develops surgical detection products, and European regulators have delayed the approval of one of the company's products, wants more information. The American Exchange Index up 0.29 today. For the week, that index gained only 0.52. Trading volume about 5 million shares fewer than yesterday. 282 issues higher, 277 lower. Spiders up 21 30-seconds. Carver Bancorp up 1 3/4. New York City Bank failed to return our calls. No news on the wires. And Zevex International down 1 7/16. The company completed a
been more than $50 billion in bank mergers and acquisitions this year. But in the wake of big banks comes an increasing number of startup banks looking to fill niches left behind. First Bank of Miami has just one office in the bustling heart of Miami's Little Havana neighborhood. It is what some call a startup bank, opening its doors in June of last year with a total staff of 10. Startup banks might seem an anachronism today, but executives say the consolidation and merger trend in the industry has left a very large void.
The void is that people go into all of these large institutions and they get there and they get an unpersonalized service. They come in there and they either have to call on the telephone to get the loan application, or they can't see anybody with any kind of real authority.
In a time when many banking services are increasingly depersonalized, the emphasis in startup banks is customer attention. There's no charge to use a teller. The teller might even know your name in a bank like this one. And unlike most banks, the money you deposit here stays in the local economy. That's provided a potent marketing tool for small bank entrepreneurs. The number of newly chartered banks has been increasing steadily since the early part of 1994 and shows no signs of slowing down. Analysts say the trend towards larger banks has in many ways helped feed the growth of the startups. For one, the hard assets, a banking office and vault, are easy to acquire.
There are a number of these available as a result of a lot of bank closings from the consolidation and the mergers. So there are a lot of bank facilities coming available, very cheap, very good facilities, which is the biggest expense of a startup. So they have a ready-made facility, they save $1 million to $2 million right off the bat.
Experienced tellers and loan officers aren't hard to find either because of industry layoffs. And finally, the startup capital is plentiful too, thanks to the stock market and a good track record for new banks. Of course, one advantage of big banks is the convenience of having a large branch network, and startups generally don't offer mutual fund investing or insurance sales, as many larger ones are doing. Still, analysts say only a recession or a series of interest rate hikes is likely to stop the startup trend. And over at First Bank of Miami, the one we told you about at the beginning of the piece, they're already planning to expand and open their first branch bank.
Monday, a look at Citrix Systems as it teaches old computers to handle new software.
General Motors is going to build a new engine plant in Flint, Michigan at a cost of up to $500 million, but due to declining demand, it's also going to shut down its Buick City Assembly Center. GM hopes to offer most of the 2,900 Buick City workers jobs in other plants. General Motors shares closed the day up a half at 62.5.
One of the most recognizable buildings in the United States could soon be owned by a Canadian real estate firm. Published reports say that the Sears Tower is about to be bought by Toronto-based Trizec Hahn Corporation for an undisclosed price. The tower is the world's third tallest building. It's currently owned by Boston's AEW Capital Management, which bought it from Sears in 1994.
Taking a look at our Bridge News Watch of events coming up next week. Tuesday, the Conference Board releases its Consumer Confidence Report for November. Third quarter gross domestic product and October durable goods orders come out Wednesday. Thursday, the markets will be closed, of course, for Thanksgiving, and October personal income and spending are released on Friday.
My guest market monitor this week is Bernie Schaeffer. Bernie is the president of the Investment Research Institute. He's also the senior editor of the Options Advisor, which is the nation's largest circulation options newsletter. Welcome to Nightly Business Report, Bernie.
Good to be here, Paul.
Although the Dow Jones Industrial Average today at 78.81 closed well above the low of Bloody Monday when it took a 554-point tumble, a lot of market technicians are saying a retest of those old lows is really necessary before we can be sure that we're still in a bull market. Do you agree with that?
Well, I was thinking along those lines, but a couple of things happened last week from a sentiment perspective that really tells me that we might have put a bottom in place on the 27th of October, and The decline last week to about 300 or 400 points higher might have been all the retests that we need. And sentiment is kind of an interesting way of looking at the market.
Well, is it largely bullish now or largely bearish?
Well, of course, there's always that contrarian,
right,
opposite way interpretation of sentiment. And we didn't really like what we saw on that first drop in the end of October.
And you wanted to see a retest.
We wanted to see a retest to get those fear levels high. Because if you look at the April '97 decline, if you look at the July 1996 decline, they both had extremely high levels of fear as measured by the amount of puts that are trading, as measured by the amount that people are paying for put options, the amount of money that's flowing into funds like the Ridex Ursa fund, which is a fund, a bearish fund that people use to bet against the market. We didn't see that climactic fear at the end of October, but we saw a lot of that last week.
So now this makes you feel that we're headed back to the old highs, a challenge of the old highs rather than the recent lows.
Right. As a matter of fact, there's an indicator. The put-call ratio was actually so high, meaning there were so many puts traded last Friday relative to calls because people were nervous, that it only occurred on an up day in the market. That kind of fear has only occurred on an up day in the market 6 times in the 1990s.
Okay.
That's a pretty significant climactic level there.
Well, obviously, options, that's your specialty. And right now, what are you doing? What are you doing yourself? You're heavy into calls by the sound of it.
Yeah, we're into calls, and of course, people have to approach options differently than they approach stocks.
With caution, for sure.
With caution, and also to understand, this is something that I get into in this new book I have out called The Option Advisor. We talk about the fact that people tend to trade options like they trade stocks, and that's a big mistake. And one of the biggest misunderstandings that people have is the fact that you need speed of movement when you're buying options. It has to happen. Not only you have to be right on the direction, but it has to happen quickly.
That's and the time frame that the option is before it expires.
Exactly.
It's not for the faint of heart.
It's not for the faint of heart.
What types of stocks right now are you buying calls on? That is to say, are you bullish on?
Right. Well, consistent with the fact that we're also pretty bullish on the bond market, we're looking at the financial services stocks, the brokerage stocks,
which
are interest rate sensitive. Well, the banking sector looks really interesting. J.P. Morgan is a pretty strong name there. The brokerage sector, I would stick with the bellwethers like Schwab and Merrill Lynch.
And how long are the calls that you're buying on these?
Well,
6 months, 3 months?
For the individual investor who's not in there, who has a day job, so to speak, who's not in there trading the market, I think you should go at least 3 months out, if not 4 or 5 months out in the options.
And if it doesn't happen in the period of the term of that option, you lose it all.
And that's the other thing that we suggest as part of the money management that we talk about in the book. Buy a 3, 4, 5 month option. Only hold it for a month or two, and if the movement doesn't take place over that period of time, use what we call a time stop, which means hold it for a certain period of time, get out, so you don't get into that period where the option just deteriorates so substantially towards expiration.
Okay, but I can still tell by the general nature that calls are the thing to be in right now.
Yes, I would be pretty heavily on the call side, but always look for put opportunities because you don't want to be totally on one side.
All right. Bernie, our time has expired right now. Thanks very much for being with us.
My pleasure.
My guest, Bernie Schaeffer, Senior Editor of The Option Advisor.
That's Nightly Business Report for Friday, November 21st. I'm Jeff Yasteen, and please be sure to join us at our worldwide website. Good night, Paul. Have a nice weekend.
And the same to you, Jeff. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is produced in association with Bridge, the global financial information company providing real-time and historical market data, analysis, and news. And is made possible by A.G. Edwards, helping businesses raise capital, structure executive compensation programs, and address complex financial challenges. A.G. Edwards, trusted advice, exceptional service. Franklin Templeton, serving investors for over 50 years. Franklin Templeton. And now Mutual Series, investment products distributed by investment professionals. The computer company with the products, services, and experience to make Windows NT a seamless solution for a networked world. Digital. And by the financial support of viewers like you. Introduce someone to the basics of stocks and mutual funds with the NPR Video Library. Paul Kangas hosts this award-winning set of 3 videotapes for beginning investors. To order by credit card, call 1-800-535-5864.
This Chicago presentation of Nightly Business Report is made possible in part by Bank of America. Power in motion. Bank of America in motion.